Hello traders! In this video, we're going to reveal a high win rate strategy using the super trend indicator combined with other high accuracy confirmations. If used correctly, this indicator is able to show you entry and exit points through the market flow in a very evident and visible way. One big thing about the super trend indicator is that it's not only very simple to use, but it's also an effective confirmation within any trading plan. This is because the indicator generates signals not only based on the momentum, but also on the current structure of the market. So, this indicator can easily improve and level up any strategy. Without further ado, let's get on with the video. First, you have to open your charting software and add the super trend indicator on the screen. Once we have found the super trend indicator, this is what it should look like on your chart. Now, you can see there are two kinds of zones on the charts above or below the candles. These change from green to red and from red to green, depending on which trend the market is moving. And, as its name says, this is a trend-following algorithm that lets us see where the immediate market flow is going. Each time we see a red zone, we'll be looking for short positions. And every time we see green, we would be looking to buy and take long positions. Easy, right? How it works is very self-evident. However, we're not just going to take trades from only using the super trend indicator, as this would lead to a low win rate and unnecessary losses in the long run. The problem with the super trend indicator is that it gives lots of entry signals both in buy and sell positions. And if we only go by these confirmations, the market may reverse on us at any moment. And that is why we're not just opening positions based on the super trend indicator alone. So, we will have to filter and recognize which entry points are the most accurate and profitable. This is why we will increase our win probability with additional confirmations. With that being said, let's get into the next steps and find out how we can increase this trading strategy's probability even further using additional confirmations. For this strategy, we're going to use a combination of 3 different indicators for a high win rate and good risk to reward ratios, which are at least a minimum of 2-to-1, 3-to-1, or more. The 3 indicators we're going to use with this strategy are the 200-period exponential moving average, the MACD, and the actual super trend indicator. Now, moving on to the second indicator. The MACD is one of the most popular trading indicators out there, and that is because it does a great job at identifying momentum. As you can see, this indicator is composed of 3 parts, 2 momentum lines and this histogram. The blue line on the MACD moves faster and is more sensitive to price changes. This is the main focus of the MACD indicator. Next, we have the red line, also called the signal line. This line reacts slower to price changes and is built to filter market noises or false movements. Finally, we have this histogram. This simply shows the divergence between both lines and a visual representation of it. In this strategy, we're going to focus on the MACD line's crossover. By taking long positions if the blue line crosses above the red line and the super trend green line is showing below the price, and taking sell positions if the blue line crosses below the red line. When trading, we are adding this to our confirmation list to increase the probability of our trading plan. However, this is just 1/3 of our confirmation list. This brings up our last indicator, which is the 200-period EMA. For this strategy, we're going to use it to identify the long-term trend direction. If the price is below the EMA, this indicates the market is in a downtrend, so we would be looking out strictly for short positions. If the price is above the 200-period EMA, it means that the market is in an uptrend, and we would look only for long positions. So, these are all the indicators we are going to be using. Now, how do we integrate all of this? Well, this is how we're going to be trading the full strategy. First, it's important to say that we are using this strategy on the 15-minute time frame. Let's start with short positions. In order to take short positions, the first thing we will need to check is our super trend indicator and how close the price action is developing in regards to the 200 EMA. Then, we would just wait for bullish structure and momentum to slow down and shift. This would mean that we are preparing to take sell entries. Next, as you can see, there is a crossover on the MACD while the super trend indicator red line is showing above the candles. All these 3 confirmations together mean that price has reached a trade entry point, and this makes the chart change directions. We can see this happen multiple times throughout time. So this way, we have a higher probability to win a trade if we take a short position. Keep in mind we can use these indicators to identify a change of market sentiment and take trades in the start of a trend change. But we can also trade with the trend we currently are in and add short positions to a developing downtrend. We can place our stop loss at the red super trend indicator bearish line, or also at the exact price where the MACD lines crossed when it gave away the short signal. However, for this strategy, we can also just manually select a 2-to-1 or 3-to-1 minimum risk to reward ratio. Now, let's get into some long examples. As we just saw, if the price goes below the 200 period EMA, we would be looking for downtrend short positions. In order to take long positions, the first thing you need to do is make sure the price is above this moving average. This will help you filter and make sure to be trading in the same direction of the trend. The second step is waiting for the MACD blue line to cross above the red signal line, while the super trend indicator's newly formed green line is positioned below the most recent candle, like this. If this happens, it means that we are in an uptrend and can start to look for long positions. We just wait for the candle that broke the EMA to close, make sure all of our other confirmations are fulfilled, and get our green light to pull the trigger. You want to place your stop loss at the edge of the green super trend indicator bullish line, or at the level the price was when the MACD lines crossed in the charts. Keep in mind that in order to take a trade, we need all three confirmations for this strategy. So, we are not going to trade everything we see. For example, if we see a MACD cross an EMA touch, but the super trend indicator has not shown any change of character in the trend, we must remain patient and learn how to filter our trades. We only trade when we have all of our three confirmations in line. Another example is if the super trend indicator is showing a red line while we were in a bullish trend. The price is slightly coming back to the 200 period EMA, but the MACD line has not crossed. This is not a valid short entry. Instead, this could be an uptrend continuation and the trend would be intact. By entering with just two confirmations, you would be missing the steps of the strategy, and this could lead to losses and confusion in the future. Keep in mind that a break of the green line doesn't necessarily mean a change of trend. As long as the structure is being kept above the 200 EMA, we are still in a bullish trend. Sometimes, this indicator gives false reversal signals. You have to be conscious of the trend you are following, as this could be an accumulation in the short term, but the long term stays constant. Check if the super trend indicator has higher highs and higher lows, or vice versa, which means new opportunities to enter into the market and ride the wave of the trend. We will focus on the prolonged movements following the trend. Usually these movements that last longer indicate if price is pushing higher or lower, and with the super trend indicator, we will have really clear scenarios regarding a bullish or bearish trend structure. This is where the strategy comes in. This will let us know when we are in the middle of small accumulations and prepare for big distributions on the price, giving us the opportunity to buy when the price is low and sell when prices are exhausting at high levels. This will let us trade when there is a change of character, or being able to ride long-term trades safely entering the market in an ongoing trend. Keep in mind that indicators show you when to enter the market, but also when to be cautious not to enter the market. While backtesting, we discovered a couple of tips that you can implement to increase the win rate, or the risk to reward ratio. First, we noticed that the win rate probability increases when only taking positions on a major session, London session or New York session for example. Filtering trades and only trading at these times will for sure make a difference. Also, if you have all of your three confirmations, try to look for a pin bar candlestick as an additional confirmation whenever you're placing a continuation or a reversal trade. This price action means that the price is rejecting a certain level and wants to go the other way. So, this would add extra probability to the trades taken. This brings us to the end of the complete super trend strategy explanation. If you like this video, you definitely don't want to miss out on the upcoming videos. See you next time.